Okay, so this is an update on how we closed the day after the CPI release for February, so February 10th. And so we did have a promising start to the day. You can see here in the hourly chart, this is how we opened the day with, a pretty promising candle. We then had this harbinger of a candle, look like we may have rebound, and then we had this bearish outside candle. You can see how, or also called bearish engulfing. You can see we made a slight new high and then just failed, and then just three straight down candles. And so that creates this upper wick here, and most importantly on the daily chart, we did not make a new high. So the high for this daily cycle is still day 7, and we're already on day 13. And so now it looks likely that we are already in the declining phase of the daily cycle. So we've been in the declining phase since day 7. Now, obviously, we have to do is make a high above here, so 45.95 to negate that. Given this market structure, that seems increasingly unlikely because tomorrow we're probably going to open like somewhere around here and probably make a probably find ourselves around 44.50 at some point. And so now it's just a question of, do we go all the way down to 4200 and maybe even lower? And for that, we look at the weekly chart and you think about where we are in the weekly cycle. Within the weekly cycle, our high was on week 13. We do have a weekly swing low, as I've mentioned in a few videos before, as of last week. But look at this upper wick, right? That's what gave us a inside week, which is what we're in literally right now. And notice this inside week just went red. It was bright green before, looked very promising. Now it's red. We have one more day to go. And so now it's a question of, do we get bearish follow through tomorrow? This becomes even more red, just fills this out a little bit. And then we get bearish follow through next week, make a new low below here. And again, if you're thinking about multiple time frame analysis, that 4200 low is the same low on the daily chart, right? Like from January 24th, our previous daily cycle low. So the expectation is we are going to have a failed daily cycle, given that, again, this daily cycle was lower than this daily cycle. And equally important, we made a low below the last intermediate cycle, the last weekly cycle, right? So this was our last weekly cycle. We've already went below that. And so the expectation is that there is more downside, that this is zoom in again on this. This becomes a lower high, right? So you have, this is your low, this is a high, a lower high, and then you finish the move down here. And the monthly chart certainly doesn't look any more promising at this point. We're, about a third of the way through the month, a little bit more than a third of the way through the month. And it's still, handedly an inside month, closer to the downside for sure. And so now you're kind of thinking, how do we close out the month? And then what does that set up for March, right? Like it seems like we're going to, at best case scenario, be inside the range of what happened in January, right? Like this, big red bar. And so we're going to have to see. We're definitely leaning bearish at this point, and we're also about to go below the 10-month moving average. Another sort of signal that you've sort of lost momentum. So Friday is going to be really important to see if we get bearish follow through. That just massively increases the odds that we're moving into a yearly cycle low. We're probably going to see 4,000, maybe even lower.